Welcome to the Capital News. I am your host, Alex Corritis. Today is Sunday, June 30th, 2019. Thank you so much for joining me doing this episode on Sunday because I missed our episode on Friday. And, of course, there was a lot of news that took place over the weekend. We're talking about the G20, the conclusion of the G20 summit in Osaka, Japan. And we want to talk about what took place between the meeting of President Trump and President Xi, because now we are in an indefinite trade truce. Tariffs have not been removed, they have not been reduced, but additional tariffs are not going to be levied on Chinese exports to the United States, and China, at least what we understand, is not going to be increasing any tariffs on U.S. exports to China. So that's a good thing. We have a truce. That's what we were anticipating. That's what the markets were anticipating. I don't think this is fantastic, historic. I don't think there's going to be a signing ceremony anytime soon. That's pretty much even out of the mouth of President Trump himself, because now he's in no rush. He's in no rush. I'm in no hurry. I want the right deal. I want quality. That really wasn't the gist of what we were told several months ago when these two leaders met in Argentina at that G20 summit. We had a 90-day deadline. 3 months to get something done. And we were told everything was going swimmingly well. We're in the final lap. There's going to be a signing ceremony. Everything is great. Continued to propel the U.S. stock exchanges up, and away. It's manipulation. It's an abuse of power. Because there was no trade deal. There was no signing ceremony. The trade talks fell apart in May. Now, everything is being tampered down. Although the president continues to say that the talks went better than expected. But we also have China coming out now and saying, hey, there's a long road ahead. So we are far from seeing a conclusion to this trade war. It's a truce. It's a truce. We'll take that as a positive because I definitely don't want to see an escalation. I want to see the president of the United States win this. If he can. I don't think it's going to be easy. I never said it was going to be easy. I don't think anybody ever said it was going to be easy. Oh, the president did. I'm sorry. He did say it was going to be easy. These trade negotiations, these trade wars are easy. So he's learning, I think, the hard way that they're not easy. I think he's learning that President Xi is a very capable leader. This man keeps his mouth shut. President Xi does. Donald Trump, on the other hand, not so much. What happens if President Xi does start to speak up and it is not in agreement with what President Trump is saying? This is what we talked about last week. This is what I talked about on the political podcast, not episode 90A, today. And I am going to continue to repeat this because it is very important. At least I believe it's very important. Because words have significance, especially when they come from the President of the United States. He is the leader of the free world. Sure, he can take to Twitter and do what he wants. I have my problems with some of it. Some of it's fine from my perspective. Some of it is not. Everybody is entitled to their opinion. That's mine. On some of these things, I don't want to go down the rabbit hole of all that, but you know my voice, you know my opinion on a lot of this, especially now. He's, 2016, it was one thing. It was new. It was novel. It was funny. You're president of the United States. Now it's time to act a little bit more presidential, Mr. President, in my opinion. Because the words you say, they carry a lot of significance. And when you come out and when you say that these negotiations, the meeting that took place over the weekend was better than expected, and then you have the Chinese coming out now and saying that there's still a long road ahead. I mean, you're getting two different stories here. They're better than expected. Wouldn't you think better than expected means we're closer to a deal? And then you got the Chinese coming out and saying, no, we're a long road ahead. It's exactly my point of credibility, of honesty, and of having the markets now wonder who to believe. And who will they believe? Will they believe President Donald Trump, that everything's better than anticipated? Or are they going to believe the Chinese? And this is nothing. This is a minor statement. This isn't a huge contradiction of saying that there's a long road ahead. And it isn't directly from President Xi himself. He's not taking to Twitter or any type of social media. But what happens if he does? What happens if President Xi does come out and say, no, we're not even close to a deal? who are the markets going to believe? Because if they believe President Xi over President Trump, we have a problem here in this country, ladies and gentlemen. And that's no joke. And that's why I'm going to continue to make this point for a very long time until something actually is done, until something is resolved, or we actually are in that environment where President Trump says one thing, President Xi says a completely other, and then we're going to have to wait to see what the markets, particularly meaning the stock markets, the bond markets, the currency markets, what they actually believe. I hope it's President Trump. But if he continues down this path of where he's hyperbolic, he makes these exaggerations, sometimes flat out lies, unfortunately, it's going to be difficult for the markets to want to continue to rally on those points, because this is the boy who cried wolf. We talk about this here all the time. The president knows when he makes these statements, it has an effect on the markets. That's why he makes them. That's why he sends out Larry Kudlow, Stephen Mnuchin, Kellyanne Conway, a whole host of people from his administration to come out and say everything's fine when we know that it isn't. So we're going to talk about some of the finer points. Again, we don't have great detail, not surprisingly, as from what came out of these trade talks, other than there's a truce. Nobody's increasing tariffs, but we're going to get to that here in a moment. I just want to go over what took place on the markets on Friday. So the S&P closed up 17. The Dow gained 73 points. The NASDAQ gained 34. The Russell 2000, the small cap index, continued its little rally, gaining 20 points, or a 1.3% increase for the day on Friday. The Dow Jones Transports also gained 1.5%, so quite the rally with the Dow Jones Transports. And the New York Stock Exchange gained 0.7%. Oil remained relatively flat. We have WTI at $59 a barrel, and we have Brent crude still trading at $66 a barrel. Gold, as it's trading right now, is below $1,400 an ounce and is right now $1,395 as I do this podcast. Silver still trading above 15 at $15.17 an ounce. The U.S. 10-year Treasury on Friday declined about 0.25% and now trading, or yielding, I should say, 2%. 2% on Uncle Sam's 10-year Treasury. The VIX, the volatility index, lost 5%, now trading at $15.08. A lot of this was on the back of a trade truce. This was the anticipation. So the question then becomes, is it a buy the rumor, sell the fact? I think we're likely to see probably a continuation of a little bit of this rally somewhat throughout this week. I don't like doing the day-to-day stuff, but I can anticipate another day, a little rally, unless there is some sort of earth-shattering news or some sort of economic news that can't be ignored. And we're going to talk about some of these headlines here in a moment. But that's what took place on Friday. The markets, at the end of the day, the last 15 minutes, particularly with the S&P, the Dow, and the NASDAQ, the last 15 minutes, they just rallied out of nowhere. I mean, they were up, they were down throughout the day, but they just rallied. They gained a lot back in the last 15 minutes of trading. So I think that was a little bit telling. And again, that's what we want to pay attention to. We want to look at that last hour, last 30 minutes, and now even the last 15 minutes of the trading session. Is there a rally to the upside, or is there a big sell-off? We've been going back and forth on this, but it's just something to pay attention to. However, the Russell just continued to climb, particularly through Thursday and Friday of last week. I mean, pretty much just getting a lot back over the course of the last week, because the prior week the Russell was selling off. It got back a lot of what it lost in those last 2 days, Thursday and Friday of last week. So we're going to keep an eye on the Russell 2000. That tends to be, I think, a little bit of a better indicator of the internals within the United States, because these are small mid-cap companies here that really don't have a significant portion of their revenue earned from outside of the United States. So it's a better proxy, I believe, for what's actually taking place within the U.S. economy, which is also fair to say when you look at these major indices, the Russell 2000 isn't anywhere close to making all-time highs. Not anywhere close. We have the S&P continuing to do so. The NASDAQ made all-time highs again, last month? Hasn't done so this month with the S&P 500. The Dow still has not regained all-time highs, but the S&P has. And still, Russell is still a ways away from making an all-time high. Can there be a melt-up? It's still a possibility. anything is possible in the financial world of Oz in which we live. You have central bankers who are pretty much panicking. They're not going to show panic on their face because that would cause one hell of a sell-off. But you just have to look at their rhetoric. And now you have to look at some of their action. They're talking about further interest rate cuts. Everybody was talking about increasing them last year or being in a wait-and-see mode last year. Now everybody wants to talk about cutting them. How could they have been so wrong? Where's all this money going to all of these quote-unquote economic and financial geniuses that sit around a table telling you what the price of capital should be? I mean, they missed the boat that big? I mean, give me a break. I mean, these people couldn't hit water if they fell out of a boat. I don't know who's paying them. I don't know how much they're getting paid, but it's too much. That I can tell you. Because this is a joke, ladies and gentlemen. It really is. The central bankers trying to now flood the global economy with even more liquidity, propping up zombie economies. According to the Bank of International Settlements, and we've talked about this last week, no less than 12% of non-financial companies in the world are zombie companies. 12%. That's more than 1 in 10. That is a disgrace. That is completely unsustainable. 12% is a big number, ladies and gentlemen. Imagine losing 12% of your income. Imagine losing 12% of your net worth. Imagine losing 12% of your body. That's like losing a limb. I mean, this ain't small potatoes. Who cares? Who's paying attention to this? Clearly, the central bankers don't care. And the Bank for International Settlements is the central bank for central bankers. These are warning shots. We have to pay attention to what they're saying. I mean, this is serious stuff. This is why I talk about corporate debt as much as I do on this podcast. Because, yeah, there might be, I think it's $1.6, $1.7 trillion of cash on corporate balance sheets. But how much debt is there, folks? Oh, yeah, that's right. There's 10 trillion plus. That's not a good ratio. That's not a good ratio. You'd rather it be the other way around. I'd rather it be the other way around. I'd rather there be $10 trillion of cash on corporate balance sheets, and then they only have $1 trillion in debt. But that's not even close. It's the other way around. They're just saddled with debt because of the system we have. This ain't rocket science. It really isn't. This is the tool of central bankers. They print money. That's what they do. It's what they know how to do. They don't do a good job at it. Everybody feels the consequences of this. This is why you have massive income inequality. But I don't want to go off down that tangent. We talk about that here all the time, and we'll continue to do so. But there's some other news to get to. So just some basic headlines that I want to go over right now because there's a lot of economic news that's going to be coming out this week. And to kickstart it, let me just go over some of these quick headlines with you. We have China manufacturing shrinking for the first time in 4 months. The China General Manufacturing PMI fell to 49.4 in June from 50.2 in May, and this missed market expectations of a flat 50. So remember, ladies and gentlemen, anything below 50 marks contraction. Anything above 50 marks expansion. This number is 49.4, so we are in contraction when it comes to this reading out of China, and this has to deal again with manufacturing. We have Japanese second quarter business sentiment is its weakest in nearly 3 years, so that's not good news. We have Australian factory activity contracts in June, so we have the AIG Australian Performance of Manufacturing Index fell to 49.4 in June from 52.7 in the previous month. So that's quite the decline. And again, contraction in the Australian factory activity. South Korea trade surplus narrows sharply in June. South Korea is a barometer, leading indicator as far as I'm concerned. Major exporting nation. So a trade surplus narrowing is not good news, folks. Let's see who else we got here. We have Malaysia manufacturing PMI lowest in 3 months. Myanmar manufacturing PMI falls to a 3-month low. Philippines, however, is a manufacturing PMI that hits a 3-month high. So a little reversal there for the Philippines. We have Indonesian manufacturing growth slowing in the month of June. We have Japan manufacturing activity contracting further, which is not good, folks, because Japan is a major economy, major global exporter. So that ain't good news either. So Japan manufacturing activity contracts further. Bank of Japan manufacturing PMI fell to 49.3 in June from a final 49.8 in May, and lower than the flash figure of 49.5. So we continue to be in contraction territory for Japan. Lastly, we have Irish manufacturing shrinking for the first time since May of 2013. So the manufacturing PMI fell to 49.8 in June. So not good news, folks. These are some of the leading indicators that we pay attention to because these are signs of what's taking place. This has nothing to do with the trade deal. The trade deal, the trade war, the trade truce, whatever the hell you want to call it, is a cover story. It's a distraction. It is not the fundamental news. The global economy has been slowing down for some time. If anything, the global trade war, or the trade war between the U.S. and China, just makes it worse. That's all. It's just going to exacerbate it. That's all it's going to do. Or it's going to amplify some things in some certain countries. That's all it's going to do. It didn't cause this. Not by any stretch of the imagination. It just might make it a little worse. Now, of course, President Trump is going to make you believe that the trade war is fantastic, that the United States is making out like bandits, that we're taking in billions and billions of dollars from the Chinese, that they're simply reaching into their pocketbook, writing us a check to Uncle Sam in the amounts of tens of billions of dollars, and everybody's better off. This, of course, is not the truth. This is not the case, because we had a PMI number that came out from Midwest region here in the United States that was in contraction. And when you look further within that survey, you have a lot of the businesses saying that the tariffs are hurting them. Now, that doesn't make any sense when you try to square that with what the president tells everybody, that the tariffs are a benefit to the United States. Well, if you have these business leaders in the Midwest who are surveyed saying that the tariffs are causing a lot of uncertainty, that they're causing price increases, which of course we're told isn't the case. So somebody's lying. Is it the president, or is it all these business executives who were surveyed and telling them what's going on in the economy? Because this ain't good, folks. It ain't pretty. It's not pretty at all. This is why I have a big problem with the president making these types of statements. Because a lot of people, unfortunately, don't have any type of basic economic education. So when the president goes out there, people want to believe their president. I want to believe my president. Whether it's Trump, Obama, Bush, Clinton, it makes no difference. You want to believe the president of the United States. However, if you look at the track record of Clinton, Bush, Obama, and Trump, it ain't pretty. So it's very difficult to trust these people. Yet still people want to do so because they want to believe their elected official. They want to believe the leader of the free world. I understand that. And unfortunately, again, a lot of people don't have the economic wherewithal to understand the basic principles of what a tariff is, that it's a tax, and that American businesses and consumers are going to be paying it, not the Chinese. So when Donald Trump comes out and makes these statements that makes it seem as if the Chinese are actually reaching into their pocket to write a check to the United States, it ain't so. It's not how it works. And to me, that's a great disservice, because the president right now has an opportunity of a lifetime to educate people on how corrupt, on how fraudulent our system is, where he really could go and drain the swamp, where he really could point fingers at those who have been responsible. He goes after the Federal Reserve, but he does so in the wrong manner. When he was a citizen Trump, when he was candidate Donald Trump, he was doing it in the right way, saying that they cause bubbles, that this is a false economy, that this is a bubble stock market. Now he's commander-in-chief, He wants the easy money. He wants the low interest rates. He wants quantitative easing, the thing that has caused all of these problems in this country. I shouldn't say all of them, but they are a huge contributing factor to them. So that upsets me like you can't believe, and that's why I talk about it here every day, because people deserve to know the truth. And when they're told that the Chinese are paying for these tariffs, it's not so. And when you look at the underlying data that is slowing down, the world over, we just went through all those headlines, from Asia to Europe, people are slowing down. Countries are slowing down. It's slowing down in the United States. That's what these indicators say. That's why we look at them. This is why you have pieces of the economic puzzle that you have to put together that paints a picture. That's what it's saying. And it ain't a pretty one right now. Can it turn around? Of course it can. Of course it can. I hope that it does turn around. But if you're going to be honest, if I'm going to be honest and objective, and I'm going to conduct what I think is thorough analysis after looking at all of this data, it is not a pretty picture. And being a cheerleader and saying that everything's great and saying that there's fantastic news, that we're in the final lap of these trade deals, which we're not, doesn't solve anything. It doesn't solve anything. It does a huge disservice, because those moments that you're using to pretty much spread propaganda, you could be using to educate the American public. You could be doing it. And I really wish the president starts doing so, because he can do it. He has the ability to do it. Just like I said, Barack Obama had the opportunity of a lifetime that could have led to him becoming the best president in U.S. history, or one of them. He completely foiled it. He completely didn't know what the hell he was doing. He was bought and paid for. Allowed the very banks and institutions that caused the 08-09 Great Recession, he allowed them to remain in existence. Allowed them to remain in existence and bailed them out, by the way. Now he'll go down as one of the worst. I didn't vote for the guy. I don't like him. But just for the sake of being fair and honest, he had the opportunity of a lifetime. Trump has an opportunity of a lifetime. And right now, I think he's ruining it. I think he has to step back and really start being a little bit more transparent and honest with the American people as to what's going on with these trade talks, what's really taking place in this economy. It's not his fault, ladies and gentlemen. That's the other thing that boggles my mind. Donald Trump was not a politician. He was not a governor. He was not a congressman. He was not a senator. He was not a quote-unquote creature of the swamp, if you will, for 30 years. He was a real estate developer out of Manhattan. This mess in Washington, D.C. is not his fault. Yet he's going in there and taking responsibility for the economy and the stock market like a buffoon. Of course, he's not going to take responsibility when it goes south, but he shouldn't be taking responsibility for any of it. He should be honest with the American people, what the true problems are in this country. And if he did that, and if he does that, he could go down as one of the best ever. But if he's going to continue down this path of exaggeration and being braggadocious and having his credibility called into question, which with 50% of the country, he has no credibility. So, I mean, with people like me who voted for him, I'm going to have a difficult time voting for him in the upcoming election. I'm not going to vote for one of these Democrats because they're lunatics. But, I mean, I have the right to vote. I have the right to stay home and not vote. It's not throwing my vote away. I mean, come on. Because he's not doing much of anything different. The swamp is not being drained. Military-industrial complex is making out like bandits. Banks are making out like bandits. And that's the other thing I want to get to here, too, because we had the Federal Reserve conduct a bank stress test. And, of course, nobody failed. Everybody passes with flying colors. And you know who also passed? Deutsche Bank. How did Deutsche Bank pass this test? No idea whatsoever, because did you see the news that came out late last week? Deutsche Bank may be cutting up to 20,000 additional jobs. 20,000 additional jobs. And of course, we talked about either last week or the week before, Deutsche Bank wants to spin off a whole bunch of their bad assets, about 50 billion euros worth, into a quote-unquote bad bank. So they want to spin off 50 billion euros worth of crap, and they want to fire 20,000 additional people. That sounds fantastic. Yet, of course, they passed the Federal Reserve's Stress test. Are you believing this? I'm not for a second. Unbelievable, but that's par for the course. So lastly here, before I sign off, and this is going to be a conversation that continues. We've been having this conversation since the beginning of this podcast back in February already. It's not going away anytime soon. Of course, it's these trade talks, or lack thereof. So we talked last week about the 3 bullet points that China was sort of leaking out to the news media as to what they were going to really focus in on this week's conversations with the United States. And that was the ban on Huawei technologies. It needs to be removed. That punitive tariffs need to be removed. And that the United States needs to remove the demand that China needs or has to buy more U.S. products. So those were sort of the 3 bullet points that were, thrown out there to the media on Thursday and Friday. And then everybody was sort of dissecting it. Well, is this the news? Is this just a few points? How many are there? But nevertheless, this is what we were working with, and this is what we were talking about last week. Well, of these 3 points, the one that has to deal with national security, the one that actually has to deal with the job of the President of the United States, is the first one. Because we were told that Huawei Technologies is a national security threat to the United States. Not just from the President and his administration, but from also members of Congress, Democrats and Republicans both. Of these 3 points, that is what the President sort of caved in on. Caved in might be too strong of a word. I'm not trying to attack the President on this one. I want him to succeed, I really do. But of the 3 points, I mean, it's his job as the commander-in-chief to protect this country. And if he's going to say that Huawei Technologies is a national security threat, then I don't see why there's any leniency here. Now, of course, you have Larry Kudlow coming out and saying, look, this isn't a complete concession. This isn't a complete removal of the ban. What we are going to allow U.S. companies to continue to do with Huawei Technologies is to sell common products. So anything that Huawei could get from anybody. But if it's specialized equipment, specialized products, the ban is still in effect. Now, we'll see how true that is, but that's what we're getting from the White House. Why are they coming out? Because they have to do some damage control on this one. Because of the 3 points, that's the one that he should not have given in on at all. But of course, he has received pressure from U.S. companies who want to sell to Huawei, which is one of the largest companies in the world, mind you, especially in telecommunications. Punitive tariffs being bullet point number 2. I mean, we got Trump, the tariff man, but he could have removed them. Now, of course, there's no escalation, which is a good thing right now, but he could have removed them if he wanted to give in on something as a show of goodwill. Maybe not entirely, but maybe he could have cut them back a little bit. Or he could have said, you know what, on the 3rd bullet point, yeah, I mean, I guess we can be a little bit more flexible with how much you buy from the United States. But that was a political promise to a bunch of farmers and ranchers and whatever, okay? This has a lot more to do with soybeans and wheat. Talk about this all the time. Because the Chinese are not going to admit that they engage in corporate espionage, that they are responsible for IP theft and forced technological transfers. They don't admit that they do these things. So how you're going to bridge this divide is beyond me, unless there is a huge slowdown in China that brings them back to the table where they think that somehow, if they can make an agreement with the United States, that's going to revive their economy. I think it'll be too late. But that could be what it is, because, ladies and gentlemen, if the United States and or China really starts to slip and really starts to slow down economically, that could be the catalyst in and of itself. We got a whole bunch of dominoes that are standing up, ready to go down. We live in a very, very fragile state right now. Extremely fragile state. And it's not going to take much to set it off. Now, what's going to happen in the markets is anybody's guess. Again, could we have a melt-up? We sure could. We sure could. Or now, maybe, the markets are going to say, well, we have an indefinite truce. Neither side is in a hurry. The President of the United States, Donald Trump, is now saying, well, I'm in no hurry. No need to rush. I want the right deal. I want quality. Of course, that's not what we were told last year and at the beginning of this year. It was all boom, 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 boom. We're going to get something done. We've got a 90-day deadline. There's no deadline. This is indefinite. So, this does not solve any type of uncertainty. Purchasing managers around the world still don't know what's going to come of this. They just know that there are not going to be any increases in tariffs over a short period of time. I mean, who knows what side of the bed Donald Trump's going to wake up on? I mean, he hasn't done this really with China. He's done it with Mexico. He's threatened Europe. He hasn't really done it with China. But anything's possible. But there's no hurry. We want the right deal, high quality. That's what we want. This to me is what the Chinese would have wanted. Because they know they're not paying the tariffs. They know it's you and me that's paying the increase in the price of these goods, not them. They have the United States now selling product back to Huawei, so they got that one. And now I think they have a little bit more flexibility when it comes to buying U.S. goods too, which is what we have been predicting here for quite a while. Because we've told you here, folks, signing a trade deal does not magically increase the demand for all of your products. If China needs 1,000 bushels of wheat, you don't magically sign a deal and all of a sudden need 2,000 bushels of wheat. It's not how it works. And then you have to keep in the back of your mind, if China starts to source more wheat from the United States, is that going to be at the expense of other countries? And the example we have used here consistently is Brazil and Russia. And if that's the case, do you think the president of Brazil is just going to roll over? Do you think Vladimir Putin is just going to roll over and say, no, what about my farmers? I care about my farmers too. So this is far from over. Far from over. The question is, how do the markets react? And now, since we're in a truce, are they going to start paying more attention to the economic data? Well, if they do, I just ran through 10 headlines, maybe a dozen headlines, and it ain't good. So strap yourselves in, buckle up, and pay attention to the Capital News because it's going to be a bumpy ride. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. This is the Capital News. I am Alex Koritis. Godspeed.